Hello, friends. Welcome to Nirmal Bang. I am Piyush Jain, and today we are going to talk about corporate in the housing finance sector, a sector which fulfills the needs of a large mass of population. And we have seen over the last couple of years a lot of wealth has been created in the sector. I'm now calling upon a management which is no stranger to our show. They have been coming on our show, apprising all of the updates. But recently, there has been a new corporate development, and let me now welcome and also congratulate Mr. Kalpesh Dave, the CEO of Star Housing Finance, and Mr. Anoop Saxena, the Chief Operating Officer of the company. Gentlemen, welcome to the show, and also we like to extend our congratulations for the elevation to the new post to both of you.
Thank you so much, Piyush.
Thank
Thank you. This is all ours, and it's always a pleasure to come on your show and share the updates. Albeit now in a new avatar that we are donning right now, but thanks for all the wishes, and hopefully we should be able to walk the talk.
Well, management is something which I think all the investors, whether they are institutional investors who in particular they track more, but also retail investors, they follow very closely. So since we have a new management at the helm at the top, so let's now understand from both of you on how the sort of is there any change in strategy? Are there new thoughts? How the Star Housing Finance is now looking at over the next couple of quarters? And I'll take thoughts from both of you. So first, Kalpeshi, coming to you.
Sure. So, as I said, Piyush, nothing changes at Star as such. Obviously, we in our new avatars have decided to carry forward the strategy that we had planned and had started implementing in FY 22-23. The same thing continues, in this financial year as well. Just to encapsulate FY 22-23, if you remember, was the first year of 100% year-on-year growth for Star Housing Finance. And 23-24 also happy to share that we have continued the same momentum in the quarter as well. So that is something which we are keen to carry it forward in terms of the AUM build-up. Also, this time our focus will also be to ensure that the quality takes precedence over the growth, because in no time, Piyush, there will be a snowballing of the overall traction that is going to happen at Star, given that we exhibit the same kind of momentum. So we have to ensure that whatever scale up is happening, it is bereft of any systemic issues as such. So that will be our precedence. Quality will always take precedence over the growth. That is something which we are keen to have in the current financial year. One more thing that we have decided in the ABM that we had at the beginning of the financial year was to basically boost our non-file income, which is a cross-sell income. So that is going to be total accretion to the PNL. And given that we now have 150 plus member staff, more than 70% of which are stationed at different locations, which are 14 physical branches covering 30 odd locations of our operational geographies. Driving the cross-sell income program is something which remains very important for the current financial year that we are thinking of. We will continue to expand. That is what is there in our business plan as well. So we ended at 14 odd physical branches covering 30 odd locations. I won't be surprised if we will be having 25 physical offices across our operational geographies, and maybe add a couple of more, maybe in Chhattisgarh or in Delhi NCR region during the current financial year. So branch expansion is also there on the cards as well. On the liability front, wanted to share that previously when we had interacted at that point of time, we used to raise liability from the public sector banks as well as private sector banks and the NHB. Happy to share that the incremental ticket size for of our application has also not now started to increase, given that have reasonable AUM scale up. So that is something which we are keenful to have spread across our existing arrangements. We are planning to diversify our liability program in terms of instruments also. So maybe all approvals in place. You'll see some kind of diversification in terms of NCDs as well in the current financial year. Uh, Capitalization levels have continued to get strengthened in the last financial year, and in line with the growth requirements, subject to all approvals in place. If there is a requirement, we might look forward for another round of capital raise as well. subject to all approvals in place. So these are the broader things that we are going to drive in the current financial year. If I want to state in one particular sentence, the pre-tax ROE levels, we wish to see that coming into the double digits at the end of the financial year, which was in double digits at the pre-tax ROE level in the last financial year. This year we are hopeful to achieve that, Piyush. On the operational part of it, I would ask Anoop to share as to what are the enhancements that he is looking forward to.
Yes, and before Anupji actually says, you refer to ROE annualized. Again, basically you refer to pre-tax, but ROE actually was reported as 7%, and that already basically is a jump from 4%. So some great improvements coming in. But Anupji, before actually we sort of before you complete the answer, I wanted to take one opinion of yours. And I remember the last time when I was having a discussion uh, about the credit rating, and at that time, basically, we were having a discussion that perhaps sometime during the year the credit rating could get upgraded, and now you have reported and upgraded in the credit rating. So, from an operational point of view, what this implies and how you intend to take advantage of it.
Yeah. So from operational point of view, there were few things actually. When we started this journey, there were few things which has been mentioned at the time of earlier credit rating, and we took those things as a benchmark for us, and we started working on those things, those parameters basically, which were earlier implied for earlier credit rating. So basically, we started working on those things, and when this new credit rating has come to us, we can see we can see multifold impact of that. One thing is our cost of borrowings that will be reduced. Cost of borrowings, we will see a significant impact on cost of borrowings. On another front, the ticket size, as Kalpesh mentioned, that ticket size, we can see bigger ticket size borrowings for us in the external world. New instruments can come to us for borrowings. So basically, these are the things which we can see as a increased credit rating.
Right, and I've noticed India Ratings is now actually rating the bank loan facilities at triple B. At this rating, will you be comfortable for taking out the NCDs sometime during the year, or you're expecting another round of upgrade?
Yeah, so we would like to go ahead with the NCD at this triple B rating. And in fact, there are some talks going in the market for subscription of NCD. I hope that sooner we will have a news about it.
Right, and we are curious to know twin impact here. One is when the upgrade happened, maybe now or maybe later, what sort of basis point difference actually happened for your cost of funds? Or if you are now taking new facilities, is it like 50 basis points, 30 basis points, 25 basis points?
There should be at least 50 basis points to 75
That's
basis
huge.
points differential rate of borrowing should be there.
Yeah, that's huge. That's huge. And obviously, that would be getting passed to the your end consumers. The spread remains
Absolutely
constant, but
right.
this benefit gets transferred. Yeah.
Absolutely right. That will be passed on to the customers.
And when you planned about the NCDs, how we should imagine? Is it going to be like? Is it going to be a lower cost of funds for you, or just another diversification at same cost of funds for you?
See, basically, NCD subscription depends upon. So obviously, the credit rating is one of the parameter of it, and apart from the quantum of NCD which we are looking out for it, and the underwriter of the NCD. So there are few parameters about NCD, and obviously the rates depends upon those parameters. But yes, what we can foresee is there would be at least 25 to 50 basis point lower than the normal rates for NCD in the market.
Okay, so that should be something interesting for the company as it moves on. So, in terms of the numbers, asset quality was very stable. I think for our viewers, some numbers I think are noteworthy. The gross non-performing assets were stable around 1.5%, net non-performing assets around 1%. Everything looked very, very stable. AUM grew very sharply. You actually saw 133% growth in assets under management. You saw actually a sharp growth of 122%. In fact, all major numbers are in triple digits. That's how the company has performed versus the last year. And you are talking also about sort of a good sharp improvement in the return ratios. So Anuji, how do you intend to keep this momentum if the investors or the viewers want to be greedy? Is this sort of triple digit momentum? Is it possible to maintain that in this financial year also?
Yeah, see, so one thing is sure that as of now we have very lower base as of now. So this CAGR growth should remain like this only, because we are as of now we are operating at very lower base, and the market is huge. The opportunity is very huge. We are just aiming a smaller pie out of it. So we are looking the similar sort of growth in the coming years.
Right. So from that perspective, from where actually the next growth in assets under management is going to come? Is it from the same sort of geographies, or there is some branch expansion, as Kalpesh was alluding to? Um, Give us some sort of insight into what operational strategy you're looking at.
Okay. So last year we witnessed a sharper growth in Maharashtra market. This year we are looking out. Obviously, apart from Maharashtra, there will be a deeper dig within the Maharashtra state. Apart from Maharashtra state, what we are looking out is to go deep within Madhya Pradesh, Rajasthan, and opening some newer geographies in terms of Chhattisgarh, or the apart from Chhattisgarh, maybe NCR and Karnataka and Andhra Pradesh market. So there will be these will be newer geographies wherein existing penetration within existing geographies will always be there. Gradually, slowly, what we want to foresee is equivalent pie within the equivalent pie within each excuse me, within each operational territory of Star Housing Finance.
Right, and from that perspective, also help us understand from cross-selling perspective, what's the sort of strategy there?
So for this year, we have resolved that we will generate sort of third party fee income for the purpose of giving benefit to profit and loss and giving returns to the shareholder. So there are few tie-ups which we has done for selling third party insurance product, which will be cross selling product for us, which is basically general health insurance, as well as some other opportunities we are looking out for as of now.
Okay. And that's interesting. Any sort of major notable agency types which you have already done?
So we have tied up with Zuno Health Insurance for selling of their cross-selling product, health insurance. That product is live in the market. Apart from this health insurance, we are under consideration for some of the life insurance companies also as a third party product.
Right. That should be something very interesting. I was looking at the numbers while you were speaking, and the numbers are so interesting. The interest income actually jumped to almost 11 crores from 5 crores, again, almost doubled up. And when we also saw some good fee income being generated, more than doubling up. And then also there was a good jump in other operating income. So largely, basically, it was sort of a very good, strong operational performance here. Coming back, Kalpeshi, uh, what's the plan in terms of when you, as a CEO, when you want to have a very sort of a top view, I remember in our last interaction we talked about it in terms of making the company stronger in the existing pockets. So, how's the plan of sort of spreading out in UP, and sort of what's the plan right now there?
Uh, so yeah, as Anoop said that we want to expand, but you have to understand that the geographies in which we are operating, Piyush, they themselves are so huge that first you have to cover all the major districts that have that kind of business potential. And Maharashtra is huge, Piyush. You know that. We have just divided Maharashtra into three different subsections, which is Mumbai region, Pune region, and Vidarbha region. It will take some time for us to basically gain some kind of a strong
Cover
foothold in
Maharashtra
these
fully.
locations itself. We are not chasing the market share, but we want to ensure
Sure.
that we want to extract maximum juice out of the entire state in terms of our presence, not in terms of getting any market share as such, because we are not chasing the market share. So the strategy would be basically not to spread too thinly out of all the geographies. Obviously, we want to become a pan-India player. It will happen over a period of time, but not before extracting or penetrating into all the major districts of our operational geography. So that is my first criteria in terms of. Otherwise, the cost to income dynamic will not make any sense. You know what I'm trying to say. So that is something which is there. We'll do that, and obviously, and when we are talking about NCR, the next region then we are talking about is Uttar Pradesh, which is just adjoining to
Madhya Pradesh.
so main thing that we are thinking is to basically get some kind of a flavor of NCR, have some presence over there, couple of branches, 2-3 branches, get some portfolio build up, study that portfolio how it is behaving, and obviously foraying into Uttar Pradesh in itself is a huge task. So we want to gear up well before getting into that biggest state of India before getting anything. But yeah, as I said that expansion is on cards. We will expand in the existing as well as in the newer geographies, and Uttar Pradesh also should happen over the next 6 to 8 quarters, if I can say so.
Sure. Anupji, coming back to you, I was just looking at the leverage ratios, and it appears to tell me that right now there is enough room for the company to grow before actually it really needs another round of large sort of equity raising here. As per you, like what is sort of growth right now is can be fulfilled from the existing capital?
So we are looking out in terms of quantum. What we are looking out is about raise of 300 crores in terms of debt. That is easily achievable at current leverage point. And but yes, we want to raise capital hands on hands, because at that point of time we can easily take benefit of our leverage ratios. So 300 crores is basically debt plan for the year, and yes, a good quantum of about 40 to 50 crores is something which we have planned in terms of equity raise for the year.
One small operational query. Of late, over the last 3 weeks, we have seen there has been a lot of tightness in the short term liquidity, the short term market. Perhaps because RBI has been sort of tightening the market. RBI again basically is not giving easy liquidity. But you have seen the call rates have moved up. We have seen the sort of short term rates have moved up. Is that something which is an active part of your sort of fund planning, or is that something which also affects the spread for you as a housing finance company? And basically, how much important is for you?
So Kalpesh, you would like to answer it?
So Piyush, you have to understand we are a long-term lender, and obviously hence by choice, we are a long-term borrower as well. So short-term money market fluctuations does not and should not affect us. Obviously, we are driven by repo rate changes in the repo rate. So when the repo rate was increasing, and we had interactions previously as well, at that point of time, my cost of borrowing had increased from around 9.75% to around 10.5%, which is right now at this point of time. That had an impact of around 19 to 20% on my balance sheet in the previous financial year. So yeah, we do get impacted, but not by the short-term, movement in the rates.
So
Obviously,
should we say that anything which is long term in nature, that basically impacts you from the perspective of liability profile?
yeah, absolutely. So that basically the banks and financial institutions will transfer that increase in the rate to us. So we do get impacted. How do we mitigate it? Is through by build up of scale, or by increasing our yield through judicious planning of the product distribution. That's how we do it.
Right, so that's an important clarity, because of late it has been a lot of talk from the perspective of how basically analysts were actually looking at banks. So perhaps this clarity will help our viewers also. It's more about the long-term liability franchise. Now, from the perspective of housing finance, how you actually are sort of looking at the environment right now. I'm now talking about from a sectoral perspective. Over the last 2, 3, 4 months, how the sort of credit demand looking to you? We all always talk about India has a huge population, so in terms of real estate demand, housing demand, it's a huge runway of growth. But how's the 2023 calendar year looking to you over the last almost 6 months?
So if I talk about the affordable home finance companies in terms of the mortgage outstanding, they are now close to 1 lakh crore. Okay, I'm not talking about the overall mortgage book is much more in India, but I'm talking about the affordable home finance companies book that is, I mean, close to around 1 lakh crore. Now you see the growth from the growth perspective, while the entire mortgage book basically increases in the range of around 11 to 12 odd percent. This book of affordable home finance company basically has a 2x effect. So it grows by 22 to 24 odd percent. And this particular growth has not died down even during the COVID-19 pandemic as well, Piyush. Okay. So as we speak now, 2023, in terms of 23-24, I think, this growth percentage is only going to get increased during the financial, because there are favorable macros that are happening and which are getting translated. You can see it evidently on the debt market side, on the capital market side. Right now, capital is flowing in. The funding cycle basically is right now kicking in, and you can see the credit offtake also slowly improving. So with that particular thing as a background, I do feel that smaller housing finance companies, specifically present in affordable home finance space, basically are slated to grow more than 24%. There is no slowdown in the real estate, in the operational geographies that we are there. So there is always a demand, and we are the ones basically who are well poised, and just like we are, some of our peers also who are very well poised to basically take advantage of this particular growth that we are going to witness. So if you ask me personally, while on a smaller base, we are planning for 100% year-on-year growth, but I won't be surprised if, as an industry, as a subset of the industry, we basically exhibit around 20 to 30% growth during the financial year.
Well, on that positive note, my last question, Anoopji, to you, primarily, that's only a bookkeeping question. Largely on the taxation front, I was looking at the numbers carefully while Kalpesh was giving his answer. From a effective tax for the June quarter, we basically have shown lower effective tax rate versus the last quarter versus the last year. Is it primarily sort of a year point, or there was some tax benefits for you?
So there are two things. One thing is there is some special reserve allowed by the RBI for the purpose of tax benefit. So one specific quantum of amount we need to transfer to a specific reserve, which is specifically allowed to housing finance companies. So one benefit we are getting out of it. The second thing, specifically for this financial year, we started working on tax planning, which we were not earlier. We were not into specifically tax planning things. So from this financial year, we started tax planning, out of which the taxation portion of it is little lower as compared to last financial year.
Well, that is actually good news for the investors, because it improves the earnings per share, and perhaps something we'll keep watching out for that over the next few quarters. But for now, gentlemen, thanks a lot for coming on our show, both Anoopji and Kalpesh. Thanks a lot, and all the best wishes to you for the upcoming quarter.
Thank you, Piyush. Thank you so much for the wishes.
And with that, dear viewers, it's a wrap on the show. Hope you enjoyed it.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.